Seemed like the perfect opportunity to record some education, given the fact that there's no real point in having strong opinions on the market right now with where we are, current climate around ETF decision. Obviously, if you look at this video in the future, then you're going to be like, oh shit, that was just before the ETF decision, and this is what happened as a result. But as of today, it just made sense to record a video on a topic that I think is very helpful for a lot of people in uptrending conditions. And this concept is either the rally-based rally concept or the trend consolidate trend concept. And what we're looking for are markets that essentially show this structure. Okay, I'll crudely draw this out for you here. So we're looking for trend, consolidate, trend, right? This is what we're looking for. And we're interested primarily in this little section in here in the consolidation region, which is how I'm going to refer to it instead of the rally-based rally. We're looking for the consolidation region of markets. Now, the reason I'm focusing on this is actually one of the best, simplest triggers to get entry into a market, especially in those kind of uptrending conditions. And there are obviously considerations around stop loss, leverage usage, how you want to take exposure to a market like that, and it's all going to be determined by time frame. But the nice thing about this overall concept is that it's not really time frame exclusive. You don't have to just be looking at like a daily time frame in order to find these patterns. You can find these patterns on the lower time frame as well that are, equally helpful in terms of securing some profit. So depending on where your preference is as a trader, whether or not that's down on the lower time frames or whether or not you're kind of looking for the higher time frame spot signals, this is a really good kind of way of getting that action in an uptrending market. So we'll go into, I think, Matic to kick things off, just because I know there's one present on Matic. So there has been one present on Matic, and it's a very early one that I covered off, and it's just down here. Okay, and we'll kind of run into some of the nuances on what we're looking for in this zone here. So we'll map this out just here. We'll actually just take this a little bit shorter here. Okay, and we'll just kind of take a look at what's going on in this zone. So we've got, first of all, point number one, which is the first thing that we need here, is we have trend. So we've got our nice clean trend. We've got our uptrending market. Everything looks good on this side of things. So we have our trend period. Now, after any aggressive move that we see to the upside, and certainly from Matic's perspective, it was a pretty healthy push. We see kind of 30% increase to the upside. We expect to see some form of consolidation. Now that length of consolidation is where things start to differ quite substantially between markets. But usually after a significant move, we see a patch of consolidation. Unfortunately, for the majority of people, what they tend to do is they use this first section of developing consolidation in order to try and position into a move that they have previously missed. So with Matic, for example, you miss the trend. People then start to position here for continuation. The market chops them up. They miss the next leg. That tends to be what happens. So this process is a little bit more kind of, just some discussion around the way the market typically acts. Again, it's hard to just put a blanket approach on everything and say this is what it's going to do every single time that we have a 30% move. But just kind of gives you a general or a broad approach to think of. If the market has moved aggressively, anticipate consolidation versus continuation of that same strong trend. It sounds like maybe not correct to phrase it like that, certainly in bull market conditions, but I think it's typically decent advice to think about the market in that format, or certainly having that structure to it. So we've got our trend. We then enter our patch of consolidation. And what we're looking for during our consolidation patch is we are looking for good boundaries, because we want this to be a range. So we're looking for good boundaries here. We're looking for resistance and support, two nice boundaries that we can play off. Obviously, that's going to take a little bit of time in order to actually give us those boundaries, in order for us to look at and say, you know what, I'm happy that this is resistance. I'm happy that this is support. And I can now clearly see this good consolidation region developing for me. So Matic does that over this patch of time here. So we've got from, the end of October until the start of November here, where we start to get a breakout. Now this level can be here, this level can be here, depending on, where you kind of are going to put that level. But what we know is that we've got a consolidating structure between here. So depending on where you want your level, down at the lows, down at the 60 region, 62, somewhere around this zone, we've got this developing consolidation. Now you can choose, because we know the trend is up, you can choose to position once you start to see the consolidation zone. You can start to position once we're sort of trading towards the bottom of the zone. If you're looking at spot pickups, if you're looking at establishing longer term positions or anticipatory positions ahead of a potential breakout, then obviously you're looking at doing business down towards the bottom of the range at that support level and establishing where you want to be positioned around that. Then you can play into the breakout. Because once the breakout happens, we expect there to be continuation of the trend that kickstarted the move. Okay, so basically just a replica of what goes on down here. So we're just looking at basically seeing exactly the same thing occur again here, where we just get another trending move after the consolidation breaks. Okay, so we've got our trend consolidation period here. And then we've got our clean trend and continuation. Now, Matic actually does quite a nice thing here in that it retests the top of the range. Whether or not you get a retest or not is really kind of situational. And it's hard to say you should wait for a retest or you shouldn't wait for a retest. For me, the safest thing to do is if we get a breakout of the consolidation after the trend, I should look at being a buyer on the breakout. I shouldn't anticipate there will be a retest, because if the market doesn't give it, then I want to make sure that I have a slice of that market. The consideration then to make is, well, what does a stop loss look like and what does an invalidation look like? Because if we start dropping back inside the range or showing weakness or an inability to break cleanly away from that consolidation zone, then I need to have an exit point. But I don't want to do so too soon. So if I get a retest, I don't want to be too tight on that just because I bought on a breakout. I now don't want to be squeezing up my stop loss to be super tight on that. So I still need to make sure that I give enough kind of width to that stop loss. And therefore, obviously, is going to affect when I'm thinking about in terms of position sizing from a risk perspective as well. Matic is a nice example on the 4 hour of something that does give a retest back into the zone and then does move away very aggressively afterwards and puts in a significant move after the consolidation. This is a nice example of this as well. It actually gives a better post-consolidation move than it did leading up to the consolidation. So a very good opportunity market in order to position for. Another one that we've got is render on the higher time frames, on the daily time frame here. So we'll start deleting some of these markings that I've got here. We can start looking at render here on the daily time frame that you can see here. So my render position is basically the workings of this process visualized in terms of what I took from a spot perspective through here. So let me hide this and we'll simply focus on what we've got here. So again, exactly the same structure as Matic. What we have here is we have our trend down here. Okay, we have our consolidation between these levels. And obviously we've got this occurring on the daily chart. So this is a slightly kind of longer consolidation zone. And then we have our clean trend on the back of this again. Okay, clear boundary, resistance here, clear support here. Look at the way that we trade outside of the support. However, we always close back inside. Very difficult to stay in leverage positions. Very good opportunity to build spot. So trend, consolidate, trend. Again, when we take a look at kind of the moves here, we've got from down here to the resistance, we've got a 2x. And then on breakout here, again, we've got outperformance on the breakout of that consolidation structure that we have through here. So another very clean example. Trend, consolidate, trend. clean breakout. You got to be, again, anticipating this breakout, because once this breakout happens, there is zero retest, there's zero movement back down. You just get 100% continuation to the upside. And again, that has to be a factor in your own individual thinking for how you're going to think about positioning into markets that are doing that. And then we've got BTC, and we'll cover this as a more kind of recent example of what this looks like. And we can take this on the 4-hour time frame, really. And what we've got up here, we can take it on the 4-hour. Maybe we can take it on the daily. I don't know. Maybe the daily is better, actually, for this. If we take this here, this is our midpoint of the range that we've got here. And I'll delete this just for the kind of the discussions again. And what we have, obviously, is we've got trend, clear trend. There's no debating that. We've got our consolidation here. Right. And now we've got a situation in which we had a breakout of a clear resistance zone here, and we had a failure. All right. So this is slightly different. This is a failed example of the trend consolidate trend. There is no trend here. There is no breakout point for us. There is nothing here. This was the opportunity, and this failed. Right? This failed. This dropped back inside the consolidation region. We do not expect that to happen. Certainly not after a significant length of consolidation. We do not expect to drop back into this zone. So we've got two things here. Number one is that we shouldn't be in a position based on that breakout. If we did take a position based on the breakout, we should be out of that position now because we're invalidated. And secondly is we now need to wait to see what the response is. If this breaks out again, then I suspect it's still an opportunity you would want to take to the upside. So you would still want to play into it. But this is a slightly different chart in that we have had a longer trending period. So you can see here, this is the trend that we're classifying all the way from kind of October through. This is the area that we're looking at. Now, the other examples really did their consolidation here. So when we were looking at trend, consolidate, trend, what we really captured on the examples like Matic and Render is this move here. Now, what we're doing on BTC is we're looking at this, and there has to be a consideration and an understanding given to the fact that the trend is now this, okay? So consolidation areas we expect to be longer. We also expect that there may be a higher failure rate up here because this trend is so strong, and therefore this may take a kind of like a slightly different outcome, given the fact that this is now a kind of a significantly longer trending market. We may have significantly longer periods of consolidation. We may have some form of distribution up here before a correction. And so we just need to be aware that once we're talking about far greater trending markets, there may be a difference to us in terms of what we're looking at in terms of success rate from playouts like this. But I wanted to balance it by showing you something that is a failed attempt, as well as those nice, easy, boundaries, taking position, easy 2x and 100% gains on your position. And then we've got the example that's kind of ongoing right now, which is TIA. And this is doing exactly the same thing. I can take the daily chart here, and I'm sure now, based on what we've been discussing, you can see the exact area that I'm referencing here, which is obviously the highs here. So again, we've got our boundary, and just like the Matic example that we looked at earlier, what we've actually got here is, well, actually the Render example, we've got significant trading below the boundary here, below that bottom support. However, we've got a very strong daily close, and then we follow that up by having a breakout of the range the very next day. So in that trend consolidate trend pattern, we would now be expecting to be on the trending stage, and we would be expecting the top of the former range to be holding. So this would have to hold for TIA, and therefore we're looking for an advance. Now, you could bring in the same discussions on BTC in order to say, well, actually, look, our trending environment here is far greater. This is a high time frame chart. We got the daily up, so maybe some factor given into that. But from a simple TA perspective, what we're looking at here is we're looking at saying, well, look, I potentially want to have spot exposure to a market that's broken out of its consolidation range. I don't want to have spot exposure to that market if it falls back inside its consolidation range. When it comes to leverage trading these breakouts, it's slightly more difficult because, of course, we have to give consideration to the fact that the market can trade back inside but close back above, right? Just like here. Just like when we're talking about, the bottom of the support region, we've got to have some understanding that the market can do this shit and then close back higher. Now, if we're in spot, we, have slightly more capability to handle that. It's not going to mean that we're going to, result in avoiding loss. Just means that we've got, probably slightly greater tolerances in order to survive some of the downside moves. But that's a simple overview. Look for those patterns. In uptrending markets, you'll see this pattern a lot. Like I said, you'll see it across multiple time frames, and it always provides good opportunity because it provides very simple risk-reward opportunities. And in trends, the market does the work for you. So once we have a clear signal, a simple signal that the market has now finished its consolidation patch and is ready to trend again, we just join in. We just tag along. We just say, thank you very much. Seen the signal. I'm going to buy some of that and just let it run. We let the trend then do the work for us on the other side. If we fall back inside the range, that's a sign of weakness. We don't want to see that. We need to think about our positioning and what that looks like. And if you're looking at pre-positioning, then you want to be doing so at the bottom of any established ranges. Key points are making sure that you're waiting for the consolidation ranges to establish. So back to the early part of the content here, make sure that after those significant moves, you're giving the market a little bit of time just to cool off and chill out for a little bit before it tries to push up higher again. So you're making sure you're aware of the consolidation phase as an active phase, not just something that's going to continue vertical forever. We want to be aware that the consolidation phase is a factor that can play out. And that's it.